Good evening, everyone. Welcome to IQI Canada Facebook Live evening talk. Today we are going to talk about construction financing. For construction financing, we have a guest is Dinesh Achria. He's with Wine Group. I've got decade of experience specializing in mortgage financing, more specifically specializing in land and construction financing, amongst other financing options. Good evening, Dinesh. How are you today?
Good, good, Junaid. How are you doing?
Amazing. As you know, today we would like to discuss what is construction financing and what are the steps involved. For the interest of the audience, again, we are going to talk about these things as a information for the benefit of the public. So, for any specific advice, please get in touch with the specialized mortgages specialist who can guide you through the whole process. So, Dinesh, what is construction financing means? Because when we talk to normal clients, we talk about financing and the mortgages, but more focusing on residential individual home financing. So, please help us understand how does it difference from the normal financing and what it entails.
Uh, Construction financing basically is a process whereby a developer has acquired the land and he is now ready to build, whether it's an office building, a condo structure, or an industrial project. So it's building that. So what happens? Construction financing is a mortgage because it becomes the first charge on the property, and it's done on a cost to complete basis when the project starts. So the process of getting into construction financing is, say, a developer, Mr. Smith, who owns a 5-acre property in Richmond Hill, through his company, wants to build a 10-story, 100-unit condo building. So what he needs to do first is, before even getting into construction financing, he needs to ensure that he has all the approvals with the city of Richmond Hill, the site plan approvals. He's got all his drawings. There's a team of architecture. There's a team of consultants who are on the project with the budgets. And then he approaches a financial institution, such as a bank or a private lender, to provide the construction funds to build that project.
So effectively, when we talk about the mortgages for residential mortgages, we already have a house built. So in order to buy that house, we put some more equity from our side, the buyer, and then rest comes from the bank to pay for that house purchase price. But in construction financing, as the name entails, is to construct that property. So
Yes.
before we buy the house, somebody needs to construct, and for the construction, the banks help you, the developers, to finance their construction a certain portion of that. But of course, you have to own a land before that, I guess.
Yes, you do.
Uh, okay, amazing. So when you talk about construction financing, so where do you start from? How does it begin?
There has to be a plan and a budget and a concept that has to be vetted by architects, the city planners, and once they give all the approval, when the city planners give the approval and the site plan approval, then the borrower or the landowner at that point will contact a financial institution or work with a broker to help arrange the construction financing. And let's take an example. This I'm talking to you about,
So
10-story building.
before we move forward, if I may ask, so how does it? So when you say that the developer needs to have an own a land and get all the approvals from the city government to which define what needs to be built and how. Now, at what stage the developer should contact uh, the agent or the mortgage specialist? Can they go directly to the bank, or is it important? And why is it important that it has to go to a mortgage specialist like yourself?
It is not important to go through a mortgage specialist like myself. I mean, the main reason to use a mortgage specialist is the mortgage specialist will work with the borrower to find a lender that can meet the requirements that the borrower has, because each project has specific requirements. Sometimes, sometimes the project needs to move faster, and it's not the banks that will step in because the banks take a long time to review documents. and provide funds, and the client wants to get moving, and he will approach a broker to work with him so that the broker can find him sources alternate to the banks.
Okay, so as a mortgage specialist, you help him build the file, compile all the documents, all the calculation working, so that it becomes easier for the lender to make the decision.
Yes.
So that's the value add you bring into that. Amazing. In terms of
And the network of lenders.
so whilst so let's suppose I'm a developer, I buy the land and working with my architecture and the teams to get all the approvals. What stage is advisable to involve mortgage specialists to start working on construction financing? Because may not be starting construction 6 months from now or a year from now, but what stage I should be coming to you?
Well, let's say the process to arrange financing takes 3 months on the outset. Given how our market is right now and getting approvals done with the city, the city can, once you submit your initial drawings and your information to the city for approvals, there's a lot of back and forth with the city, and this could anywhere take from 6 months to 18 months, depending on the complexity of the project. Your planner and the borrower's planner has to be in touch with the city on a constant basis to kind of get a timeline. And normally, so you're looking at different kinds of projects, and at a different time you need the financing. So for example, if you're building condos for sale, you have to make sure that, okay, you've got, besides all the paperwork, you also have to make sure you're registered with Terion, which is our body that governs new home construction and new condo construction that are sold, because there's a warranty given with that. So you need to be registered with Terion. Then you got to start the pre-sales process. So if you're building a condo or even a residential subdivision, you have to have a certain percentage of pre-sales before any financial institution would look at you to start the build.
So you mean to say the developer, they market the project and started selling it. So the buyers who sign the agreement of purchase sale and put an initial deposit to demonstrate that if they launch 100 units, at least certain amount of units have been sold before even they started the project construction. Correct?
Yes.
And why is it important? Why it is necessary?
Because any institution wants to see that there's a demand for the project and there are actual buyers at the end of the day. Because the way the institution gets paid back is they will then advance the money for the construction and the building is complete, and they get paid back when the occupant of that condo unit, the resident, is paid up his full amount at the end. That's how the construction loan gets paid back.
Okay. So
that's the exit strategy.
Okay. So once the developer comes to you, what's happened next? So what is the eligibility criteria? And then you said you have to have land, you have to have a Terion warranty, you have to have certain amount of pre-sold. Then what happens?
We need to see, normally construction financing is based on loan to cost. So say if the budget is $10 million, we at least need to see, to get good rates, meaning conventional rates for construction financing, we need to see between 25 to 30% equity from the developer side. So that means he's looking on a $10 million project, he needs to have at least $3 million equity, and then the $7 million will be arranged to construction financing.
So the $10 million includes the cost of the land, is only the construction?
Yeah, with the cost of the land, yes.
So effectively,
because what happens is when the construction loan comes onto the title, it pays off the land loan if there is a land loan, because the construction loan is now in first priority position.
Okay. So I think we're going to talk about the land financing in a separate program.
Right.
But assuming the 10 million is the total cost of the project, including the land, and if the builder has to put at least 20-25%, which is 2.5 million, and 7.5 comes from the construction
lender
financial or the lenders. Okay. So what happened next, and how? Is it so? How do you differentiate between we use different terms, LTV and LTC, the loan to value and loan to construction. So how does it? What is the difference between?
Loan to value is the end value of the building,
Hmm.
you know.
Okay.
So like we know the cost to build it is 10 million. That's so the loan is initially on loan to cost, but the completion value is 12 million
Hmm.
with all the when you account for all the sales and everything.
Okay.
So your loan to value for the end project will be lower versus your loan to cost going into the project.
So mostly construction financing is driven by loan to cost versus loan to
Yes,
value, which
yes,
happens in your residential financing.
yes.
Okay, perfect. So in terms of the what sort of lenders are available? Like, are they normally banks does it, or what sort of financing are available, and what sort of sources are available?
There are banks are there who do the provide funds for construction, but the process with banks take longer. There's a lot more, as you call it, especially if you're a first-time developer, it's going to be very hard to get financing from a bank.
So what are the
Uh,
alternative sources?
the alternate sources are there are private institution lenders that are between banks and private lenders who also are very involved in this process. And then finally, there's your private lenders where you're looking at high interest rate loans.
Okay. So in terms of those regulation or requirement from the central bank, are there any specific requirement for construction financing?
Yes, obviously, besides the equity, there's the pre-sales requirement is there to see how many pre-sales are there, and that is across the board with any lender. Banks are more stringent; they want a higher percentage of pre-sales. Private lenders would like to see at least 50% of pre-sales.
And the banks?
Banks could be higher than 50%.
Okay. It depends on cost, project to project, who's the developer,
Yeah,
what's the track record.
and depends on who the borrower is and what their
So,
past
so what happened?
experience
Let's
is.
suppose once so when we talk about the land is there, equity is there, they come to you, you have the file, you apply for it, and let's suppose then what happens? You get a term sheet. So how does that process start works then?
So the bank or any lender will look at the project. They're going to ask for appraisals. They're going to ask for environmentals. They're going to ask for geotechs. They do their own due diligence. They want to see a line item budget in order for the construction. How much is hard costs? How much is soft costs? How much is also like how much is like the borrower? Because normally, if it's the first time developer, there's a everyone has a project management fee. They want to see which of these can be deferred costs to the end rather than paying all up front. So that they will study the whole budget. A project that is, I know lenders, projects, anything above like $1 million or $2 million for construction financing, you also have to have a cost consultant involved in it.
Okay. So once but I think the construction takes a year, 2 years, 3 years time. So how does that funding happen?
So the funding is done on a draw basis.
Mm-hmm.
There are certain milestones that are that are agreed upon in the term sheet or the commitment, whereby and a certain amount of monthly draws that happen. It's normally like for a project that's like 10 million in size, they want to make sure that the minimum draw every month is $250,000. So what the borrower has to do or through with his project manager during the process has to make sure that he collects all the receipts with all his contractors. It's provided to the cost consultant. The cost consultant at the end of the month does a site visit, prepares the report, and submits it to the financial institution. And then within 4 days or 5 days, a draw is processed.
And then the construction developer
Yeah, that's
pays
how
back to all the vendors and suppliers who have been doing the work.
exactly.
And in that process, are there any retention being kept to make sure that
Uh,
the
some projects do have 10% holdback. Some don't. It all depends on the size of the project and the borrower, and also on the lender's appetite.
oh, amazing. So in terms, so what have you how with a lot of things happen and changes happen due to COVID, right? we always talk about pre-COVID world and post-COVID world. What changes have you seen in more specifically in construction financing and during the COVID phase?
Mm, what I've seen is the due diligence period, whether it's a bank, whether it's a financial institution that's in between a bank and a private, or a private lender, has increased. They are putting in more emphasis on their due diligence, taking more time to understand the project. It's like, even though there's a lot of money on the sideline for projects, but lenders are being cautious. And one of the reasons for that is there are a lot of first time developers in the market who believe that their land has appreciated without them doing anything.
Hmm. Okay. So because current surge in the increase in the pricing of especially in the single home, how does it have any impact on the because the, because I don't think the cost of financing will increase. Cost of financing have gone down, right?
Cost
But
of
we have seen the
financing,
increase in the price sales value of the home. So is it not because of financing price? I think it's a function of market.
it's a function of market. Yes, it's a function of market. It's a function of also a slight increase in raw materials. As we know, lumber has gone up
Hmm.
throughout, and other components going into it. But you're right, financing costs has kind of been like, even with like private money starts anywhere between 8% for construction financing and goes to 10%. Banks start anywhere from prime plus 1.5 and go up to prime plus 3. So it's been kind of in that range. But what's happened is the demand for people moving out of the downtown core into more suburban areas has increased, and they realize that because of this pandemic and COVID, and you were stuck in your condo downtown and you're paying $2,800 a month, it's better to take that money out of the rental and put it into the mortgage for your home, given interest rates on mortgages are so low right now.
So when you talk about the construction financing, and then you said that it's being paid as and when the project progress in terms of the percentage completion. At what stage the construction financing get supposed to be repaid?
So if it's a project where you're selling the condos, or you're selling the residential homes,
Hmm.
it is on the sale of those residences that the loan gets repaid.
You mean the closing
Yeah, on
after
the
the possession
closing.
handover?
Exactly,
Okay.
because that's when a residential mortgage broker gets involved in the deal, and he deals with the client who's bought that unit or who's bought that house.
Okay. Okay. Perfect. Now, in terms of the construction financing, is it only for the newly built construction, or is something also if I had an old building, I don't want to renovate it?
Yeah, so that we call that tenant depends again. If it's a rental building, it's called tenant improvements.
Hmm.
So the way that works is, again, I'm just keeping the numbers very simple. It's a $10
Yeah.
million, the building's worth $10 million.
Hmm.
There's a present loan of 5 million on it, but what the client wants is he wants another 2.5 million to upgrade the building. Wants to improve HVAC, wants to redo the carpeting, redo the suites, everything. So what they do is, in that case, a construction financing, it's more called a tenant improvement loan,
Hmm.
whereby the existing mortgage on that building is replaced with a new mortgage for 5 million, and then there is another 2.5 million added on for tenant improvements.
So what if okay, perfect. What if I want to build my own home, right? Like I have a piece of land, I want to build a single home. Does it also help? Does the bank also provide me financing for the construction?
There are some banks that do, depending on the relationship the client has with the banks. But
Okay.
a lot of times it is the privates who step into that to provide the funding for just a single family home.
And what about the small developers? Just suppose I have a small piece of land, want to build 10, 12, 15 units. How does that work?
That also can work with banks, credit unions, and private money.
Okay. So if somebody want to have an idea, so if anybody is watching this evening talk, you can get in touch with the IQI team. You can get in touch with Dinesh because we IQI Dinesh as a wine group work together in a lot of projects. and as a partnership. So anybody who's looking to understand or discuss anything, any questions, so please get in touch with us. Dinesh also does a lot of construction financing, but also the other commercial financing, I guess.
Yeah.
Uh,
And then there's also construction financing is also used for industrial projects besides
okay.
residential.
And how
And
does that work?
that it's very similar to on it's all again all the same things need to be provided. Like there's an appraisal, what is the land value as is, what is the project completed value, the environmentals, what kind of obviously if it's being an industry, if it's an owner occupied industrial, there's some different requirements versus those that are being built like an industrial complex is being built for different units to be sold. There are different requirements.
Okay.
But again, they require a cost. All construction financing, whether it be residential subdivision, whether it be a condo project, whether it be tenant improvements or industrial, a cost consultant is involved in it to verify the budgets provided by the developer and to work with the financial institution and the developer for the draws every month.
Okay. What if we talk about the project which are being constructed and being sold? What if somebody want to build the building and would rent out? How does that work?
So
Because
the
there's
way
no
that
pre-sold. There's no pre-sale in
so
this.
so the way that will work is it's again based on a draw basis. It's the same process of the funding source is going to be the same. But what happens is at that time, if the client is dealing with a conventional bank and say the rates are prime plus 2%, which say is around 5% now, if you just round it up, he'll get the funds at that rate and he'll build his building. And then there's a period called stabilization, whereby it's built, it's rented. It's normally a 6 month or a 12-month period. So the loan is a little bit longer in that way because then the building stabilizes with the rent rolls, and then you get takeout financing and get him a more conventional rate on his financing and pay off the construction loan.
Okay. So I think it's amazing that there are a lot of things which are possible, and a lot of people who are looking, other than the big developers, other who are looking to venture into the construction, they always talk to us, the IQI team, and the Dinesh, and we can always provide a full end-to-end solutions from starting from procuring the land, looking for land financing to construction financing, helping out with the development and the sell mandate for that.
Right.
Um, so if we were to recap, Dinesh, so if you were to recap that, what the quick process that you have to have a land, make sure that you have a land, and then you work with the architecture and the consultant to make sure that you have design and the build and city approval, and then
Yes.
at the same time engage with yourselves who can basically take you through the process. So if you were to put top five things that they should have to for you to help them to get the financing quicker,
So
just to
the top
recap.
five things, the most important, I mean, make sure that you have the site plan approval document from the city. Okay. Like, don't say that it's coming, it's coming. I know there's some developers who keep saying that and it never materializes and they're just waiting for the land to appreciate. That's a total different story. But make sure you have the site plan approval. You have a budget okay, the budget it doesn't need to be like 100% tightened right now, but it's kind of like a high level overview where I can take it to an institution and say, okay, this is the project. They have the site plan approval. This is the budget. Based on this, let's take a look and see if you're interested in providing
Mm.
financing. One thing is every institution is very well aware of the markets. They know what the cost to construct is, what the hard cost number should be, what the soft cost number should be, what contingency number should be in there. So if a developer says, "Oh no, I can still do this at $100 a square foot," then there's something really wrong, or the developer says, "I can sell it at like $600 a square foot," while everything else in that market is selling at $500 a square foot, then we know there's something wrong. And that's where I step in, or a person like myself from our commercial team who's handling the file will go through all these numbers and work with the borrower to say, this looks a little overpriced, you
Okay.
know?
So in
So
terms of
we,
the land and the site plan approval and the budget, and the most important thing is the pre-sale. So the
yeah,
pre-sale is where we come into the picture, where we help them, the developers, to sell the project, and
exactly.
market. And marketing and sales is important as well, because until you market and sell and generate the demand,
Yeah,
you will go the construction financing.
yeah. I mean, it's different. It's different when you're doing like a,
Yeah, can you hear me?
yeah.
Yeah. So you're saying something. Yeah, go ahead.
No, I'm saying like basically like it's for smaller projects, it's a lot more streamlined. Can you hear me?
I can hear you. Go ahead.
Yeah, for smaller projects, it becomes streamlined. Like doing 10 townhomes is much easier than building like a 250 unit condo building, because it does that requires a lot of reiterations of budgets and back and forth, and the process takes longer. So the quicker you start with it, it could anywhere take from 3 months to 6 months when you're looking at like 250 units. But 10 townhomes, you can get within 6 weeks. You can get an approval from a bank or
Okay. Amazing.
or a lender.
Amazing. Thank you, thank you, Dinesh, for joining us and sharing a lot of information you shared. I think
Thank
it
you.
was good to know that how and what it involves in construction financing, which is quite different from the normal mortgage financing.
Yeah.
Anything else to say as closing remarks?
No, it's I'm happy to act as a, the way I work with clients on construction financing is more as a consultant. I'll review their budgets. I will ask them all the questions that are needed, because, as you know, Junaid, I used to be a lender in my past life. So, and I've done a few crazy construction financing projects both in Canada and the US.
So it's important for anyone who's looking for financing to talk to a specialist person, and who can better than the Dinesh. And of course, every construction financing require a sale. So we are, as an IQI, as a global brokerage firm, has a lot of experience in selling pre-construction projects across the globe and in Canada. And thank you again, Dinesh, for taking the time in your weekend evening,
Thank
and
you,
looking
Junaid.
forward to
Thank you very much for having me once again on your live chat, and I look forward to working with your brokers and yourself and your clients.
And so we will come back again with Dinesh after a few weeks and talk about another topic in financing. Till then, thank you very much, and have a great evening. Bye bye.
Bye.